trade management as a hedge fund manager. Now, for me, I aspire to be a hedge fund manager, someone who manages people's money, and to do it at the highest level. Now, this coronavirus and this world pandemic has taught me a number of lessons. And with me, I love sharing and sharing my experiences so other people will make the same mistakes that I've made, okay? Now, one other thing one has got to look at, because at the end of the day, what happened was, I'm in some really good trades, for example, every single one of my clients' account, I've moved up to more than 20%. So, when you're in the winning streak and, you have no fear, of course, I've got lots of other clients whose account was much more risk averse. Now, one thing I'll say is when you're trading as a hedge fund manager, you can't take on risk, too many risks on the same type of markets. And for example, one mistake I made was I was heavily trading the indices, and the indices have got, oh my God, it's been really plummeted. It's one of the worst time in my entire trading career as a hedge fund manager, as an aspiring hedge fund manager, because, and of course my strategy works. Of course, I made one mistake, and that one mistake sort of really put everything into perspective for me. And one thing I'm going to say, never get to the point where you trade too many of the same markets without having your hedge on some other type of market. However, during this pandemic, this coronavirus situation, the market is not moving accordingly, because you would expect, for example, gold to be, excelling or going up, going up, but gold is going down. The US dollar, of course, is a safe haven. So the market is just trading totally, outside of the norm. And of course, this is a serious event, because people are dying, people are worried, people are scared, So this is what I'm going to try and explain to you, that, look, at the end of the day, never ever trade and put too many markets in the same sort of. For example, you're there and you're trading the indices, but you're doing the FTSE 100, you're trading the DAX, you're trading the S&P 500, because all of those markets are correlated, and they're going to move in the same direction. Or if, for example, you're looking at the Aussie pair, the Aussie pair has gotten a lot of beating at the moment, because the Aussie pair links in and ties in really well with the Chinese economy. So as a result, if you're there trading, that's going to also be hit as well. So it's having a well-balanced portfolio. That's the key. Now, another thing as well is, as a aspiring hedge fund manager, I needed to have cutoff points, and one needs to have a cutoff point. And that cutoff point is, if you've got a rule that states that if your client account decreases by, and you've got open trades, and especially if you're in some sort of situation, a terrorist attack, some major events happening, and the account is down, say, 20% from the 100% mark, or you're in some trades, I would suggest you close out those trades and have 80% of the account to build yourself back, rather than say, you know what, the market will come back. Because that's what I've said in this experience here I'm having, that the market is going to come back, because the market always come back. But for this situation, and for 2012 and 2007 situation, of course the market did come back. But how long did the market take to come back? Now, also, you've got to have the capital within your account. Now, if you're trading people's money, Somebody's going to wait 8 years for you to, get them back to that point. Especially you might have some pensioners who would like their profit or their income now, So if I can leave 3 things with you, if you're an aspiring hedge fund manager or even an hedge fund manager, because I know there are a number of hedge fund managers that has gone under this week. Fortunately for me, not all my clients are suffering, only some. But most of my clients whose account has been affected are clients where I've traded indices, and and that's where the problem is, because the indices, but the forex has been like up and down, and I can manage all of those. And forex for me, it's been that's been really good. However, like the indices, it sort of bring a bit more funds in. But of course, if you want to take a lot more risk because you want to make a bit more money, it's going to take a bit more risk as well, But then, as a aspiring hedge fund manager, do you do a bit here and a bit there?